To wake up with Cheddar, everyone here on Wall Street markets are pointing lower ahead of the start of the trading week. The Dow and the S&P 500 futures both seeing declines right now. Take a look at the S&P 500 on the right side of your screen. You'll see those futures pointing lower by about 10 points, just about 0.2% there, and about 0.4% in the red for the Dow Jones Industrial Average, 135 points there. This is ahead of earnings season, which begins this week. Big banks, JP Morgan, Goldman Sachs, they are expected to kick it off tomorrow, and expectations are running high as economic recoveries, well, that is remaining underway in sectors across the board. And so for more on this, let's dive in with Thomas Hayes, who's the chairman of Great Hill Capital. Thomas, great to have you here with us this morning. Ahead of this earnings season, what specifically should we be keeping in our minds as the broader context and perhaps fodder for what we're going to hear from some of these companies over the next several weeks?
Well, Brad, thanks for having me back. The number one thing is earnings are going to are estimated to grow 63% year on year. We think that could be even higher, over 70% year on year. That's the good news. The bad news is over the next couple of weeks to a couple of months, every time you turn on the TV, you're going to hear someone like myself on TV saying peak growth, peak growth, peak growth. And they're going to be using that like it's a negative thing. And it's normal. We're not going to grow 70% earnings every single quarter. But I do believe we're going to grow consistently above trend growth for some time to come. We're only 1 year into the new business cycle, so we're very optimistic moving forward. Obviously, the comps for this quarter are very low with the world shut down last year at this time, but we're pretty optimistic moving forward, Brad.
Okay, and so as we are continuing to kind of inch closer towards the initial companies that are going to be kicking that off, financials and airlines are going to be in focus, and we were able to play a clip earlier in today's show of United Airlines CEO and what they're expecting in terms of business travel and when that will actually come back. How important is it for the airlines, for anybody that's in the travel industry, any of these companies, to give as transparent and clear a vision as possible, especially even as they are seeing a lot of leisure travel taking place for the summer months, when they're expecting the most profitable parts of their business to come back?
Yeah, well, Brad, I think you lay it out very well. The TSA pass-through numbers have been very promising. The leisure travel has been higher than pre-pandemic. It's making up for the slack in business travel. We do think business travel is going to come back. Every business wants to save costs until they lose business because they're not out pressing palms and having steak dinners like their competitors are. So that will certainly come back over time. But the banks are the name of the game, and we kick it off tomorrow with JP Morgan and Goldman Sachs. The bad news about the banks is that their trading revenue across the board is going to be down close to 30%. Their commercial loans have not bounced back as aggressively as we would like to see. They'll be down about 3% across the board. However, it's been made up by many positives. Number one, you're going to see dividend increases. They passed the stress test. Dividend increases are going to average up 40% across the board for Q3. And the investment banking and deal revenue, think SPACs, is up 30% year on year, of course. There's been everyone and their mother has a SPAC now. And then reserve releases. They released $14 billion of reserves last quarter. That was taken. They took tens of billions of reserves, anticipating the worst case scenario, 20% unemployment last year. It never came to pass. And we could see another maybe $10 billion of reserve releases. And that's a positive thing because that goes straight to the bottom line to earnings.
Got it. Let's talk about this big tech crackdown as well. President Biden signed a new executive order last week to take on anti-competitive actions in the big tech industry. And the administration here, Thomas, has been saying that companies use power to block competitors and gather personal user data. I want to get your reaction to the executive orders, specifically as it relates to how these companies have been trading since these discussions have accelerated in Washington.
Yeah, well, there were 72 actions on Friday. It's hard to keep up with them all. 75% of U.S. The premise of this is that 75% of U.S. industry is more consolidated than it was 20 years ago. That's the basis of the administration's initiative, and they want to use regulation and in some cases possibly breakups. As it relates to tech, they're looking at these kind of killer acquisitions where big tech has been buying up-and-coming competitors and either rolling them into their business, or even shutting them down so they don't become a threat. So the consequence of this is you could potentially see some spin-offs, and it's low probability, but it's certainly possible. So for instance, Google could potentially be forced to spin out YouTube or Waymo, Facebook maybe Instagram or WhatsApp, and Amazon, potentially Amazon Web Services. While it's low probability, the unintended consequence of doing that is the shareholders would make more money because the sum of the parts is greater than the whole. So if they are forced to break up, shareholders will certainly do well in that type of situation. As far as data collection, that will be an overhang because the less data that they can collect, the less targeted their advertising will be, which means the advertisers will have lower conversion rates and potentially not be willing to pay as much. But then again, when they're the only game in town, you really have to pay what price they name. And I think generally it's good to take a look at this. I think less will be done than people are anticipating. Mm-hmm. Some of the other areas of the executive order, like healthcare and lowering drug prices, are kind of interesting because it's forced us to take a look at some laggard groups like generic drug providers that have really been left for dead. We're taking a look at Viatris and Teva. Both are trading at less than 4 times next year's earnings. They've certainly been left for dead, and I think they're going to start to get a bid on the back of these executive orders looking to lower drug prices.
Certainly. And then just lastly, while we have you here, since we were talking about big tech, Amazon, Apple, Microsoft, they've all reached record levels in recent weeks after months of volatility. So can they keep up? Can this momentum sustain itself?
Yeah, I think you have to be selective. I think certainly you're seeing the Amazons of the world break out after 12 months, just to your point. Since last August, they had basically done nothing, big tech. They'd gone sideways, consolidated gains. And now you're seeing companies like Amazon start to break out. I think Netflix has some legs. And by the way, one of the things of the executive order is net neutrality, which means the carriers can't slow down or throttle selectively the data flow. So something like a Netflix or Amazon Prime is going to be a beneficiary of that coming back. So we do like Netflix here. We do like Amazon. And then some of the others, it remains to be seen. Apple has the overhang of the lawsuits with regard to their service fee, the 30% App Store fee that they collect from developers. So we'll wait to see more and how that develops in the European courts and in the U.S. courts. On balance, though, it does look like they're ready to take a leg higher. And certainly with the 10-year yield being below 150 basis points, we've seen a serious bid in tech over the last 4 to 6 weeks because the long-dated earnings that they provide become more valuable in the short term when rates are lower.
Absolutely. Thomas, always a pleasure to get your insights and perspective. Thanks so much for the context and the backdrop as we go into this earnings season. Thomas Hayes, chairman of Great Hill Capital, joining us this morning. Thanks so much, Thomas. Everyone, when we